Welcome back to my channel. I'm the cover call guy, and this is my journey to creating a $120,000 per year passive income portfolio. It currently yields $61,000 a year, just a little over $5,000 per month. So I am halfway there. Once I reach my goal, I will see what I want to do next or what I want to invest in next. Legal disclaimer: all content presented in this video is for informational and educational purposes only and should not be considered financial advice. I am not a licensed financial advisor, broker, or professional. The information provided is based on my personal opinions, experience, and publicly available sources at the time of publication. It may not reflect current market conditions or individual circumstances. Trading and investment involves substantial risk, including the potential loss of your portfolio, your principal. You should always conduct your own research and consult a licensed financial professional before making any investment or financial decisions. Views are expressed are solely my own and does not represent the opinions of any other party or organization. I'm just some random idiot you found online, and I could be completely wrong. So please do your own research. This was my own research, and I could be completely wrong. With that out the way, today I want to talk about why you have to have your foot into crypto. Why everyone should own crypto. Okay, these are the reasons why I own crypto, and I will be showing some cover call ETFs that I own so I can get my foot into crypto. I personally own Bitcoin. I love Bitcoin, and I feel that everybody needs to have crypto in their portfolio. Not financial advice. I just feel like everybody should have crypto in the portfolio, but these are my reasons why. Let's get into it. All right, a great recalibration, and what I mean by that is follow the money, right? Wall Street is adopting blockchain and why it matters for your portfolio. All right, the next trillion-dollar market, I believe it's upwards of at least 10 trillion, right? That's the projected size of tokenized real-world assets market by 2030 as traditional finance move on chain. So Wall Street is already doing this. Wall Street is already adapting the blockchain network. Some of them are already transferring to use stable coins, right? Trillions and trillions of dollars will be flowing in. I'm trying my best to follow the money and get my foot in and collect money on the way, and I don't want to miss out. And why would you want to miss out either? So follow the money. Right, Wall Street's new rails, it's already happening. Like I said, right, institutional adoption is no longer a theory. Major financial players are actively using private blockchain networks to settle transactions, tokenize assets, and reduce counterparty risk. This is about using the underlying technology to upgrade financial infrastructure. So you can see here, interbank settlements, tokenized funds, trade finance. It's all of this is going to go up. It's going to. Wall Street has already implemented. So it's just a matter of time and forcing everyone else to adapt and get on the blockchain, right? All right, so this is the dilemma, right? So I've come to this dilemma myself. As the rail of finance are rebuilt, the assets that run on them are also evolving. This presents a new question for investors. If institutions are adapting technology, should you have exposure to the assets? And for me, I said yes. I want exposure, right? Exposure means I have some type of chance of growing with it. The case for diversification, of course, people are still going to potentially want to lower their speculations and want to stick with traditional markets, right? But over the long time horizon, top tier digital assets have shown how low correlation to stocks and bonds. So a potential model is digital assets. So many institution models suggest a small deliberate allocation, 1 to 5%, can enhance risk adjusted returns. But remember, this is projected to be a $10 trillion market by 2030. So 5%, one of 5% is a lot of money. we're still on in the early stages. This is still fairly new, right? Risk and reward. All right, so the thesis is just a small allocation has defined limited downside, right? You only lose one extra investment, but a potential for outsized non-linear gain, 10x or 20x or more. I believe eventually, if you hold long enough, it's going to only go up. People are buying Bitcoin, people are buying crypto-related cover call ETFs, right? The digital gold thesis. How investors are gaining exposure. There are ETFs. Approved spot Bitcoin ETFs allow investors to gain exposure. I own crypto related equities. My two favorite are BTCI and BLOX. BTCI is owned by Neos and BLOX is owned by forgot, but it pays weekly and BTCI pays monthly. I love BTCI a little bit more than BLOX just because I believe so much more in Bitcoin, and I don't want to be exposed in too much in blocks where ETH, the guy's still alive. I mean, anything can happen, right? But for Bitcoin, we don't know who the creator is, where the creator is, if he's still alive. And for me, that's a sense of security. I rather own BTCI and then dabble in a little bit of blocks for that weekly payment when my BTCI position is fully built out. But these two are one of my two favorites. I think these two are one of the best. Again, put the disclaimer there. This is not financial advice on investment carry risk. Tickers are shown for illustrative purposes only. So please do your own research. All right. I love Bitcoin. I love crypto. So I go with BTCI first and then blocks. You might not like either. And then, of course, the 401k. If anybody hasn't caught on yet, right? A lot of people think that the Department of Labor, Trump issued I believe, an executive order allowing people to use their 401k to invest. All right, so really, the truth is, you can fact check me on this. Most crypto investments, retirement plans are actually happening themselves. They are directing their own investment. It's not your company and you have 401k. I believe it's being managed, right? So you have your own IRA or 401k and you're managing it yourself. And then convergence is here, right? We're already at the stage where crypto is taking off, and you're either gonna take off with it, like the meme says, have fun staying poor. The integration of traditional finance and blockchain technology is defining trend of this decade. I believe it is the future. A lot of things are going to be on a blockchain just because it can be proven it's safe, right? It's evolving, right? So the regulatory clarity is still evolving. The institutional seal of approval on the technology itself, it's gaining traction. If Wall Street truly fully adapts it, we will be forced to do what Wall Street does, because there's just so much money involved. Every other publicly traded company will get involved, and that just leaks down to privately owned. So at the end of the day, I believe everybody should try to get their hands on crypto, because you either own the crypto itself and have the keys, or you at least dabble in the passive income. That way you are not directly owning crypto, but you have your foot into it, right? You kind of have that passive income coming in, and you kind of could use that passive income to buy Bitcoin or ETH itself. But I believe this is going to be a big thing, right? A $10 trillion market. Hopefully you guys don't miss out. I don't want to miss out, and follow the money. The money is flowing into Wall Street, and Wall Street is setting the trend. So hopefully you guys like the video. Hopefully it has educated you a little bit more about crypto and the two cover call ETFs. And let me know what you think.